Now, Lou clearly enjoying Hampstead Gardens, and Lou's actually in Darwin at the moment. He's up for a national award for his community service. So good luck, Lou. Thursday night, tomorrow night, he'll actually see if he's the winner. And we're the finalist also nationally on the medium agency category. So we're pretty excited about that. Hard to win, but if we win it, it's worth every bit of the effort. So absolutely fantastic. Good luck, Lou, up there in Darwin. Now, we've got CommSec's Chief Economist, Craig James, with us in the studio. Welcome back, Craig.
Good to be here.
Now, Craig, we've got a couple of emails. One of them is from George Harley. Where are properties headed over the next 12 months?
Well, over the past 12 months, things have been soft, and soft not just in the Adelaide market, right the way across Australia. The figures from RP data show house prices down 3.3% over the past year in Adelaide, unit prices down 7.1%. Australia more generally, house prices are down 4.5%, units down 3.5%. So broadly, Adelaide is tracking in line with the bigger picture story. We think that we're starting to see the troughing out of house prices, and we are going to see an improvement over the next 6 to 12 months. Now, we don't think things are going to be shooting the lights out, but we are looking for price growth somewhere between 3 and 5%. And we always look to the fundamentals, the fact that demand is picking up, an increase in terms of migration, stability in terms of interest rates, potential for an interest rate cut, not a lot of supply on the market, and the job market's still in reasonable shape.
And what about the volumes of transactions? This is my question, by the way. This is not one of the viewers, but what about the volumes of transactions? Do you think there'll be more action, more activity?
If we see stability in the news flow, so less bad news coming out, people are going to be focused much more on the opportunities rather than on the risk. And really over the last 12 months, what a lot of people have said, well, we've had the problems in Europe, we've got new taxes coming through, the instability of the government, you name it, there's plenty of reasons to be sitting on your hands. I think people are starting to get a little bit sick of that, and if you do see an improvement in terms of the news flow, Europe, United States, other parts of the world, certainly here in Australia a bit more stability as well, people are going to start to focus on the opportunities.
Craig, we've got time I think for one more. We've got a heap of emails here, but one more just before we go. So from Jaden Norris, I quite often hear about unemployment rate being referred to in real estate market reports. How exactly is unemployment related to the housing market?
Well, if you've got more and more people who are unemployed, which haven't got jobs, they haven't got the ability to be able to get in the market and buy. So certainly that's a negative. It's also the fact that if people realise that the job market is soft and unemployment is reasonably high, they start to get concerned about their jobs. And if you start to get concerned about your job stability becomes an issue, you're less likely to be able to move into the market. So at the moment we've got a jobless rate sitting around about 5%, very, very low. But if you had people who are uncertain about their job prospects, doesn't matter how low the unemployment rate is, because we're talking about 95% of people with jobs. Those people have got to be confident about their jobs to be able to go out there and spend, invest, employ, do the normal sorts of things.
Craig, just very quickly to summarise from where we see it, back in the 80s, late 80s, there was double-digit unemployment, double-digit inflation and double-digit unemployment rates, and basically we were still selling property then. At the moment, people are employed. There is an oversupply. The market was hopeless in oversupply. There were empty apartments, units, well, there weren't apartments, units in those days everywhere. Now there's no oversupply. Rates are pretty much historic lows, and realistically that's as low as unemployment rate as we've seen. It all adds up to at least a steady market, even though the confidence is low. So, no boom maybe, but it's looking pretty good.
Yeah, no, I think you're right. I think the fundamentals, sort of are positive. One of the other aspects that we've got in the market at the moment is that banks have got, sort of high term deposit rates. If you've got 5.4%, sort of on a bank term deposit, people say, well, in the current times they're uncertain, I'm going to put my money there. But what we are starting to see is an improvement in terms of borrowing conditions for banks. If those term deposit rates come down, that's going to be an extra incentive to be able to do something useful with your money, rather than just parking it, sort of saying, well, okay, we need to focus on not just the short-term situation, but the longer-term outlook. Where am I going to generate my wealth from, not just in the next year, but the next 3, 5, 7, 10 years?
Final tip, Craig James's best tip for the week relating to property in Adelaide or South Australia?
Think over the longer term. So don't think short term, think of longer term, look at total returns, find those properties which have got some sort of special factor, some sort of exclusivity, because then you know that when you're going to sell that down the track, certainly that property is going to hold its value.
Craig James, thanks for being on the show.
Thank you.
Now let's go to hot property.
Well, that's all we have time for today. Hope you enjoyed the show. And remember, we have plenty of properties which will be going up for auction over Easter on the Flurio, so get down there and check them out. Also tune in next week as we'll be featuring more properties as part of our SA's Finest range. So that will be next Wednesday at 1 o'clock, but for now, here's some more hot properties.